Let's dive into the markets with Ari Wald. He's Oppenheimer senior analyst. Ari, always good to see you here, and good to see you in that hoodie. It's always good. So your advice to I was reading your latest note. Your advice is to investors: stick with what's working. Why is that good?
That's right. Well, there's currently some cross currents hitting the market right here. We're in what we think is a near-term base amid is what I think is becoming a longer-term bull market. So I think within that, I think we're at a point where the base fills in a little bit. We're due for some consolidation. But I think it's going to be very difficult to try to time those ebbs and flows of the market. And in general, I think as the base progresses, you're going to see breadth improve. And actually, some of these stocks are going to already start moving higher. And I think we're already seeing that in some of the high growth names within tech and healthcare. I think that's what you want to stick with, the leadership.
Hey, Ari, I'm trying to get the thoughts of all of our market guests yesterday and today on oil. Are you playing in that space right now, given this unprecedented drop we've seen in oil prices?
It's just absolutely amazing. And so you have this slowdown in the economy, this built up supply in oil, and now there's nowhere to store it. And you have the May contracts that traded in negative territory. I mean, such an idiosyncratic event probably calls for a very odd play, and that's looks like the tankers have been the way to play that story. A little bit near-term overbought. They're small stocks, really not big parts of any benchmark. But I think that would be the small subset of energy to play. Overall, the stocks really just do not screen well for us. They've been big parts of this decline, not only in 2020, but for several years. So while some stabilization would be both welcomed and reasonable, we just see more attractive opportunities for funds elsewhere in the market right now.
Hey, Ari, it's Heidi here. So talking about those mega cap tech stocks like Microsoft, Amazon, Alphabet, Facebook, I mean, they've been on a massive run, and they've sort of been safety trades during this whole COVID-19 outbreak. A lot of investors hiding out in those high growth names. That being said, companies like Alphabet, they rely a lot on revenue, right, from advertising, and that is expected to take a big hit. So going into earnings for a lot of these companies, what are you seeing? What are you thinking? And how should investors be thinking about sort of the dangerous position that a lot of these stocks are in with the big run that they've had?
Yeah, it's been a nice run both through this snapback, but really even over the last several years, over the last 10 years. So this is far from a safety trade. Stocks are going to be leadership in this economic expansion since 2009 is far from safety in our view. This is instead just a secular bull market that we think is still in play, and their resiliency through the ups and downs, I think, is the more important point, where they've been able to lead both on the upside and the downside. So what the market is telling me that they've been able to hold up through this is the strength that is likely to continue. I mean, we kind of would bucket the market into three groups, and let's look at the alternatives. Where we're actually most concerned is in the actual safety trade, the real true countercyclicals, utilities and REITs, bond proxies with high dividends. We think they're going to be at risk to underperform as the market slowly recovers and gets repriced to the upside through the course of the year. And then on the flip side, you have the very deep value cyclicals, small caps, where to get behind them, we say you got to be more bullish than we are. So instead, we're seeing this premium get in place on these high growth companies in this low growth world. Those trends look like they're still intact to us. So as much as they've run over the near term, these are big breakouts from 2 years of resistance. Some of these just starting to get going. These are stocks you want to stick with and buy on pullbacks as we see more upside over the course of the year.
Ari, one trade go ahead, Alexis.
Would you describe what you're seeing, Ari, as you just said, a secular bull market? Is it, or are we in a bear market rally? Because they're two very different things.
Two very different things. And let's define what we're talking about. When we say secular bull market, that encompasses both bull and bear cycles within that. We kind of think in terms of the 3 to 4 year bear cycle. Often when you talk secular bull back, you got to think back 1950s, 1960s, 1980s, 1990s. And then that's the environment we think we're in. In those environments, the bear markets can be very short and sharp. Think 1987. That's what we just saw. That was the decline that we had from February to March, where we dropped 35% over a 20-day period. That was the bear market. Now we think we're entering a new bull market that I think could continue through the balance of the year.
All right, one important trade that you highlight in your note is buy Walmart, but sell Coca-Cola. I get it, but I think a lot of investors are out there now buying these coronavirus stock up type trades. But maybe your key point is it that you don't have to own everything in the space?
That's right. We provide these market and sector neutral pair ideas in many of our reports. So within consumer staples, the standout is Costco, a little bit more of a growth bent to it than Coca-Cola. Coca-Cola probably more high dividend safety. So I think you want to stick with the growthier side of consumer staples. Costco, a stock that's been able to outperform during rallies. That's what we like to see. On the flip side, Coca-Cola, really just a defensive trade. It had outperformed for much of 2019 as low volatility in general did well. But a lot of those stocks are actually coming out of our momentum calculation. I think a stock like Coca-Cola really is at risk if we start to see the market get repriced to the upside and there's hits that a lot of these recessionary fears have already been discounted.
All right, well said. Ari Wald, Oppenheimer senior analyst. Always good to see you. See you. Stay safe out there.
You as well. Take care.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.